Hey, it's Mack with PriceActionTradingSystem.com, and it's Tuesday. It's November the 19th. This will be our chart lesson for today, and it really was a range day. This looks a little messy. I'll clean this up in here in just a moment, but I wanted to show you a couple of different ways you could have seen today. It's really early on. It was obvious that this was a trading range. It didn't, it kind of the lows were kind of the lows from yesterday. We had a little failed break lower here, and the highs were kind of the highs from yesterday, and we had a little failed break higher here as well. We got a little outside that earlier today, and then we kind of overshot it to the downside later in the afternoon, and then we closed back inside those highs from yesterday, highs and lows from yesterday afternoon. And so that's what I'm looking at is the main area of the range. The only way, and the real clue is notice how prices are on both sides of the EMA. We got a little trend going here that was pretty nice. Then we had another one that was pretty nice coming down. But for the most part, otherwise, prices are all over both sides of the EMA, and that is your strongest clue that you're in a trading range. And so when you see that, when prices are swinging both sides like this, and really the only way to do this is just draw your short-term trend lines and use them, and you'll come out better. I don't have this one on here, but there is a little trend down here as well. But it just kind of swung off both sides of the range, so you didn't really necessarily have to have it. It kind of comes down right through there like so. And you can see it there, and we kind of made that little failed break lower, and then we just took off from there. So this one really, you didn't really need it. You just kind of bounced off each side of the range. Again, we had a little failed break lower here, and then you had a chance to go longer. But if you drew your little trading ranges, it was real obvious. You had your move down here, you had your break, and then you move to a new low, and then you had your move up, your break, move to a new high, and you really got one more shot up on this one, and then your move down, your break, and then a move down to a new low. And even this one, you got your move down, your break, and your move to a new low, two legs down, and then you start up again. And just to show you a couple of things, a nice target on this one. There was your first leg down, and if you look for a measured move, you see we came up a few ticks short, but that's not uncommon because you got the strong support there. We just couldn't really get any further. But that would have been a good place to get your target, and then I would have probably done the same thing on this one if you were still trading this late in the day, which this is really late morning. This part over here is a little later in the day, and you can see your target would have been right down here about where we went to early this morning, and we got a little bit further down and couldn't get much more. And so always look for your measured moves because they'll help keep you in the trade. But the most important part is having these little ranges correct and watching for the break, and then a retest with a new high. So let me show you the trades I saw. I really didn't like anything until by the time you came in. If you were here this morning when this was coming up, you could have taken a long down here if you wanted. There's not a great setup because you really were inside this little channel here, and it's probably a little lower like that off those closes. But there's really, you had to wait on your break. You might have thought about going long right there. I don't even know if that would have worked, but it was a little dangerous because you're getting close up in the area of the highs. Of course, your high was really up here, so you might have had enough room. So it's possible that some of you might have gone long right there. Let's just see if that one would have worked. I didn't mark yet, but if you use a stop, you really wouldn't have wanted to use a stop here because on this break higher, you would have you would have been using this for your signal bar, your break above it. So if you did that and used a limit order, you could have gotten filled back to 88.50, and you would have gotten out that way. It would have worked. So if you did that, you were probably okay. But the reason I wouldn't want to go long here is you don't have much room before you get to this high right here. and it's getting close up here to where all this resistance was before, and you just found resistance there. Um, so I think it's a little tricky going long right there. It is right off the trend channel right there. We did kind of get outside of it a little bit too. So if you did get tripped up there, uh, I would have exited when this thing turned down or when it made this double top, definitely, and you could have even gotten out with a tick or so then. But the only way really to enter that one safely was to think about using a limit order, and even then, I doubt I would have dropped it right there. I would have tried to get probably down into here, and I don't know if you would have gotten filled when it came back here, but I would have been a little less leery of hanging on for that one. And then I didn't really like it going long there because now you got a double top almost right there. So again, I don't think you want to go long there again, not unless you used a limit order here, and you might have gotten filled. I can't remember if that broke higher first or not. You'd have to go back and look at it again to see. But when this second entry long failed right at that same spot, a little double top and that little bearish reversal type bar, I like that because you got a trap there, and now you're headed to the other side. You don't know that it's going to take off like that, but guess what? If you caught that and you caught a runner, you can ride this all the way down here. And, you know, I usually would probably just look to exit right here. You might have held on and you could have got a few more ticks, but if you wait and start putting your stop above the next bars, you get out the same place either way. And I did like going long down here. It's two legs down. It's a failed break below this. The odds are you're going to snap back to the EMA at least, but this thing just keeps on rocking. So if you'd caught a runner here and a runner here, you probably could have been done on those couple of trades today. This one I do in green simply because of all the overlap, the same reasons. You got this resistance right here. You don't know that you're going to get through there. If you got that break above and you used a limit order back here off the trend line, we didn't have a break of the trend line yet, but we didn't really over here either. And you see what happened, you could have got tripped up. So I think that one's really aggressive. I don't really like it. But you could have gotten filled on this one on a limit order way back here by the trend line and maybe have enough room. So if you did that, it's probably okay. I don't see any reason to go long. Other than that, you might have thought about even going short right there, but it's, you know, you've got a bunch of overlap there. That's a doji. If this one would have broke above and then down and broke below on the same moment, by the time it closed, then you got matching double lows, and then by the time this one closed, a matching double low. That's congestion. You can't go short below that. So, and I think it's too risky to go long there because you've already had your trend line, your channel break right there, a move to a new high, and you know, I don't like going long there. If you took that, you see it was a second entry. Notice the new high, first entry, pullback, second entry, and it did bounce off the EMA. So I guess I should draw that one probably in green, but you know, to me, I think it's just too risky. There is room to get out before reaching here, but the reason I didn't like it is because we already had a break of that trend channel and a new high, and a failed chance to go higher there. Excuse me, but you did. You know, I'm going to leave that one in green because if you decided to take that one, you know, it's a little more risky because you're coming off these highs here. And but it worked really, you know, it was a really nice trade if you caught it. And then you got a failed second entry long. Actually, it's not really. Yeah, it is a failed second entry long because you got a new high. First entry pullback, second entry. It fails and it turns down. Look at that bearish reversal bar. The fact that it broke higher first, you could have had your stop right below that bar, and that one was off to the races. Easy pickings. Even your runner, your runner would have survived by a single tick there, and you could have ridden that one all the way back down here as well until you get the break. I think they came back finally and got it. That shows you how efficient this market is. Well, they still didn't get that. They still couldn't get that break even, but notice that perfect double top. That's what they were trying to do. They were trying to come back and get those stops right there. And they almost succeeded. Again, they came up. There was some really strong resistance there. And Well, I missed this trade. Hang on. And then you got your channel working down, and you figure you're probably coming back to here. But a lot of times on a way back down on a range like day like this, you do get your break before you get to the low, and then the retest makes the new, goes on down to the low end of the range. It's not uncommon to see that. So, um, but I like this trade right here. It's a break. It's like it got back in the range. It came back and retested. It's right off that trend line. Um, Chance to go short right there is really a two-legged move back to the trend line right there. Um, you, I just use a stop right there because you figure we're probably going all the way to here. Easy scalp, but it did bounce. And, you might have even thought about going short there, but notice it never triggered. It comes up. By the time this one triggers, look at all that congestion. 1, 2, 3, 4 bars in a row. You don't want to go short there. You don't want to enter out of that long or short because that's what happens. It fails out the bottom, then it breaks out the top and fails, and then it turns down. And you get a nice little trap here. Notice that it's a failed second entry. Well, it's really not a second entry long. You're coming, if you're counting off the low, it's a pullback first entry, and then it's still not even a second entry there. So, but there's a trap right there. You can't hardly see it because of that bar. But notice that we broke out here. It looked like it was going to go higher, and then it pulls back and it tries to go higher again, and then turns down. That's a great entry. And this is a second entry short right here, actually, with that little trap. So. Draw your trend line right there. And you can see that little channel. Excuse me. My throat's bothering me a little bit today. But I like that one. Again, it broke out the top. You could have had your stop right there at the low and go short right there. And it's off to the races again. And again, you don't know it's going to take off like that. You figure it's going to come back down. And if you saw this, I have this bigger channel. I think there's a bigger channel there. You can see it's in play. It started off this high. You didn't really need it if you just taken the shorter term ones. That's all you needed. But there is a bigger channel there in play, so I put it on there in case people wanted, saw it. If you drew your line off those first two, it was obvious when it came back to here. And there's kind of a median line in there, and here's your other side of your channel way down here. And it's definitely there. Like I said, you don't really need it, but if you saw it, I wanted to put it on there because some people might have seen it that way. I like this trade right here. It's a failed second entry long. Notice you got your new high. Let me make this a little bigger for you. Got a new high, pullback first entry. You're coming down second entry. It fails. Nice little reversal bar. What it is, it broke through that median line. That's like a support area when prices are above it, and it breaks through and it pulls back and tests it and it acts as a resistance, and then boom, off to the races it goes. But there was a trap there too. It's not a really obvious trap, but it's still good enough. And it's, if nothing else, it's just two legs back to that little that little trend line right there, and reversal right off of it, and boom, again, that's another nice move coming off of that. So I was pretty much done for the day by then, but I did mark these last two. There's a failed second entry short here. And if you were looking at this as like a trend day, you probably wanted to go long. A range day. If you saw this trend channel, it's probably going to bounce here, but you got to really be paying attention to what's happening down here on these second entries and stuff. Otherwise, you're likely to get trapped and it run lower again. So I drew these in green. I think they're a little aggressive longs unless you didn't see the channel, the bigger channel, and you were just playing this like a range. And it still is like a range day. You can see prices are still swinging. So, but I still think they're a little aggressive. But notice your new high here. You got a little two-legged move. First entry, pull back. Second entry, short. It fails. You definitely don't want to go short here because you got the support right here. And if you saw this channel, you know that it's running down there too. But when it failed to go short, that's a chance to go long. Easy scalp, nothing more, and it comes down and it makes another new low. And you did have your trend line break and you moved to a new low, so you've had your new low. So I like that one with the trap and the new low. and then you get another little two-legged move down. But you got to wait on a second entry on one of these. If you took this one, it would have worked, and it was a failed break below all those matching lows there. So you might have, a real aggressive trader might have even gone long there. It's a second entry. Notice that high, pull back first entry, pull back second entry. So it's two legs down. So a real aggressive trader, I'll go ahead and circle it. I don't really like it, but you know, if you want to be aggressive, it's there. But I like, when we get down to these lows, when we're working down, I like to count off the other side. And there's your new low, your first entry, pullback, and your second entry right there. And it's a higher low. So that one's not quite as aggressive. And that was a nice, and you can tell the smarter traders were aware of that higher low in the second entry, and look at it go. And then you get two legs back to the EMA, and there's another second entry. Look at that. That's what rejection off the EMA looks like. Boom. It didn't it didn't really reject immediately there, but right here, boom, it takes off, and we're headed right back up to this upper side. You can see we came back to the upper side of the range, and the trend channel. We got them both, and so that was what I saw for today. It was a pretty good trading day if you saw the range and you understand how to trade ranges and so forth. And they can be tricky, but when you start to see the prices swinging to both sides of the EMA, that's your first clue. So you got to pay attention to that. Well, we got a big move here in the overnight, big bar, but that's not uncommon either. So. But anyway, that's pretty much it for today. My throat's bothering me a little bit. I'm going to call it a day. We'll be back to do it tomorrow, but this is Mack with PriceActionTradingSystem.com, and we'll see you next